What we'll do is for the first 45 minutes, there'll be a presentation. And then for the final 15 minutes, there will be a time for Q&A. So if there are any other questions, then please let us know. And we'll feel free to drop them into the chat box, and then we can address them at the end. Could I please have a sign of hands? If you could all just click the button to let us know that you can hear the webinar, and then I will kick off. Brilliant, thank you. So just a little bit about RedFern. We're a full-service China digital and e-commerce agency. We work very strongly across a number of categories in the market, covering everything from food and beverage, fashion, mother and baby, cosmetics. So pretty much the full kind of spectrum. We work with brands in terms of e-commerce, social media marketing, creative, production, and research. So today we're going to look at first is China a viable market? For me, some popular categories that we've seen come through in recent years, modes of market entry, how to structure your market entry, building sales online, Tmall for the year one, budgeting, social media, and then I'll run through some common pitfalls that some brands run into. So very quickly in the beginning, is China a viable market? For me, as you can see, there's still being a lot of growth in terms of e-commerce. For most brands, when they're looking at the market for China, e-commerce is really the #1 option. Even if you're looking to partner with a distributor, from our data, what we've seen with most brands is their sales through e-commerce channels in the first 3 years is at least double what they do in terms of offline. It's not only validation for what you'll do in the market, but it's a big part in terms of being able to grow your brand and match it with your media. Unfortunately, due to the segmentation of the offline market, when doing lots of media marketing online in China, it is quite different to often match this with actual initial purchase, which means you make lots of noise, but people don't know where to buy your products. E-commerce allows you to circumnavigate that and essentially allow for a very quick shortcut to purchase. If we look at some of the statistics here, we've got 68% of Chinese population is online, 79% of all internet users have shopped online. And you can see here in terms of e-commerce sales in China continuing to grow year on year. And then if we look at cross-border, which is often the first step into the market for the majority of brands, although growth has slowed, you can see that transactions are still increasing year on year. And 1.69 trillion RMB market, cross-border is really a huge opportunity for brands when they're coming into the market. Some of the other things as well in terms of F&B imports, F&B was actually the highest growing category in the last year in terms of opportunity in the market. We're seeing that consumers are trading up to more premium, healthy or functional foods that are different from what they can access in the domestic market. One thing to take into account also is that with foreign products in food and beverage, they do play into a different segment which focuses more on quality and provenance. And so although there has been moves in recent years in F&B, in recent months in F&B and over the last year towards domestic products, the market is still growing very strong. So in terms of social versus traditional e-commerce, you can see that one element in terms of growth has really been through social e-commerce. The #1 player in this market right now would be Douyin. So all brands that are in market, depending on their category, it would make sense to look at opening a Douyin store. You can basically have a discussion with your agency or with Douyin to try and understand whether your category would fit. But we are seeing that sales are taking off on Douyin, and in terms of ROI is actually often higher for certain products on that platform. In terms of purchasing power, this is something as well that we're seeing continue to increase in China, as I mentioned previously, especially with food and beverage. So we're seeing larger spending changes being planned in China in comparison to other countries. And we see this as something that's going to continue on into the next year. Obviously, with the economy, the economic bounce back that China has had, this is a good sign. But we're seeing that in terms of through cosmetics, food and beverage, there's less of a focus towards discounted products and more towards value for money. So if we look at the Singles Day from last year, you can see that Tmall obviously is still dominating, and it is really the platform of choice that we provide. We suggest to brands when coming into the market, unless they're in particular categories such as childcare accessories, homeware, or electronics. But generally, Tmall is better, despite the growth that you can see here in JD. And what we do find is that it's quite good for brands outside of festivals to have growth on Tmall, because there's a lot more you can do in terms of in-app marketing. And then later you can always transition to JD to have your products listed on this platform as well. In terms of some other things that we've seen here in terms of the clusters, you can see here that in terms of the online relative penetration rate, that facial tissues, infant formula, skincare, makeup, and diapers have continued to increase. We're seeing a number of different other classes that are forming as well. But essentially, there's a continued acceleration for all categories in the market when it comes to online sales. In terms of popular categories, as I mentioned, food and beverage is really one that has seen the highest spend and growth. In terms of mother and baby, there continues to be higher spending growth for foreign products, although there has been slightly a move towards domestic products in certain categories, especially in some infant nutrition. Beauty and cosmetics as well, watches and glasses and jewelry. So these are some of the major categories to look out for in terms of opportunity on Tmall. Tmall also have different lists that they can provide and that we publish. We'll be publishing some in the red edition that will be coming out later this week, that basically list more niche opportunities that might be in, for example, nutritional health products and other categories as well. So if we look at strong recovery after COVID-19 in terms of products that have done quite well, alcohol was one that it did well. So in terms of Chinese spirits and sake, there's one that's been listed here. We know that alcohol did very well during COVID itself in terms of online sales, and is one of the leading categories now online. We've got things such as hair conditioner, ready to drink tea, which has been very much pushed forward by Haiti. Then you've got skincare, beer, soybean, toothbrushes, toothpaste, etc. Certain things that we've seen that have had a decrease would be nutritional supplements, candy, yogurt, biscuits, and wine. So these are some of the kind of the boom and bust during the period after COVID-19. Okay, so in terms of popular categories that have sprung out in Tmall in recent months, so this is basically the last few months. You can see here, I think this was last month, in fact, Tmall announced the upgrade of these subcategories to first level categories. So we basically had men's beauty and skincare has become a leading category in the market. It's doing very well in terms of growth. Perfumes and fragrances, designer toys, and pet supplies. So these have now moved into essentially the highest level of what Alibaba is looking for in terms of categories. And hair care as well. So in terms of hair dyes, and particular hair care is obviously a big category. Particular subcategories within hair care are now on huge demand, have huge demand by Alibaba. So there's some of the categories that are doing quite well in terms of the market. I think before coming into China, the most important thing is to look how categories are changing online, because that will depend on how much you essentially have to invest into Tmall and into marketing as a whole. With regards to the next stage is really looking at, okay, what is my model into China? When you're looking at the different modes of entry, this really depends on a number of different things. One being the category that you're in, which will determine whether cross-border e-commerce, for example, makes sense. And then two, in terms of the budget that you have. Generally, there's a big decision between should I have a flagship store, shouldn't I have a flagship store? The major element between that is often ownership, right? So if you're working with a distributor in market, they will own that flagship store. It's very rare that brands will set up an entity in market just to own their own flagship store. They'll often work with a distributor. With cross-border, it's often a case of trying to hold on to that ownership. There's no need to relinquish that. You can hold on to that yourself. But again, it depends on budgets. Often it can technically within the first year be cheaper to onboard with a distributor rather than to run your own stores, just because obviously there's payments up front for product. But in the longer term, there is more return and more margin if you are to hold your own store. And also, if you find that the distributor is not performing to what they agreed, then you have the ability to swiftly change and move on to another partner. With cross-border e-commerce and domestic, they're both then broken up into private and public traffic. In our opinion, private traffic is really very limited in China. I've in the past been a little bit not very optimistic about private traffic, and I would say now that that's definitely been cemented within the last 6 months. We're now seeing that the likes of mini programs are just not working in the way that they would. It's too expensive in order to build up a mini program or website in China and try and capitalize off that. Really, the only option for brands now is to work with public. So I'm going to kind of quickly jump through private. Because of the way that WeChat is closed, it essentially means that people often won't see their mini program. Websites, because of the way that consumer behavior works in China, people don't search through .coms to buy products. If they're looking for a particular product they can't buy in China, then yes, they may buy from your .com in your home country, but they won't within China mainland. So with regards to most of the traffic, it's looking at public. Alibaba now have opened up a number of options. So they have online retail stores where you can sell through. They have their global fulfillment system. They have obviously the flagship store model as well. So often what we suggest to brands is to have both. It makes sense to work through different retailers, to work through Alibaba's platform where it's more of a B2B2C element. And then it also makes sense to have your own flagship store, which is D2C, so you can own that traffic and you can really ensure that any sales that you have, you're able to take the data, you're able to retarget, you're able to build loyal customers. So public is often the way forward now. I think it's been very much accepted in the China market. If you come into domestic, there's also the opportunity of going through the JD and Tmall supermarkets. So anyone in food and beverage, that's an obvious path to go down, as well as your flagship too. And then if you're also in domestic, they're vertically integrated platforms. So there's lots of applications as in mother and baby or in alcohol that are very specific to that type of category. So that's another element to take into account as well. But generally, when coming into China, don't go private traffic, make sure you go public. Whether you're going to work with a distributor or not is obviously dependent on whether you'll go cross-border or go domestic. Some of the major differences would be, in terms of what's right for me, mini programs really only hold opportunity if you're looking to sell, 20, 30, maybe 100 products a month into China with little investment. To be honest, though, without any marketing towards a mini program, you're probably going to sell about 3 a month, if that. So it's an option there that's definitely put in for SMEs that are looking to have a market play, but mini programs really work, and we do set them up for brands that have retail stores in market. So if you're planning to have a retail store offline in market, it is an amazing way to have people to come in or come to your event if you have a pop-up, to purchase a product, to then leave that location, and they can then buy online so that they can scan through within your store and retail. If that's the case, then it makes sense. If not, then I would take them out of the equation. With regards to SMEs coming into market, so not going through cross-border, Douyin stores are becoming a really great alternative. They're very cheap to set up. We've had a lot of success with brands in this area. But again, there is no such thing as a cross-border Douyin store, so you have to be in market for that to work. Focusing on paid media launch is obviously a big element as well, ensuring there is some brand awareness. And then working with vertically integrated platforms. That would mean selling through your distributor to retailers such as Hema, such as Baby Trees, any of the Buy My Wine, all of the different types of apps that are vertically integrated within your category. So that's kind of the best way forward. And usually for an SME, working with a distributor will help initially. The cost will be higher in the longer term, but it means that it helps with cash flow. With SMEs looking at market entries are cross-border, so initially looking at coming to market, cross-border through Tmall would probably be the number one. JD is an option, but it would probably be later down the line. I would always start with Tmall, apart from particular categories, paid media launch, and then also Daigo. There is a distributor model also with SME cross-border. So a lot of brands that we've been working with do have distributors that are buying product within market, within their home country. So for example, if it's Australia, they're buying product within Australia and then would sell, they would take on the product and then sell that cross-border on behalf of the brand. That's great, that can work, but you do need to understand that you would have to lose ownership of your store if you go through that method, because essentially the entity that is selling the product also has to receive the money. And then in terms of large market entry, it's more straightforward in terms of working with Daigo and then also with Tmall and JD. So how to structure market entry? You essentially have offline and then you have online. The major elements with offline is they can work together, but without online, you don't have that branding element to support the sales. We've worked with a number of brands that have come in and just had an offline play. In snacking, that does make sense to some extent. You need to have snacking, you need to have that inconvenience. But with the other element is that without enough marketing and online sales over a longer period of time, you will find that rotation rates just do not lift off in the way that you would expect. So what we often suggest is that you try to bring through your pricing, your branding, your discounting, everything online to try and get first-time purchase, so that when people are offline, that they will often see your products in retail and then purchase. Other ways that we now use offline is really to work with, to do sampling. For a lot of our clients now, the cost of traffic on Tmall and online has become so high that we're doing lots of different pop-ups where we'll do sampling where people can purchase products, they can try products, and then they can go home and buy online when they're given a coupon. So that's something we found to be very effective. And it's essentially an O2O traffic diversion. And then, so if you are looking to come through into a model and work with a distributor, as I mentioned before, it makes sense to really hold on to your cross-border channels. The way that I would work with the platforms first is to go with the Alibaba platforms. That means essentially Tmall being the first, Kaola and Suning being the next. The reason why is it's very likely that you'll be working with Tinyao. Tinyao is a logistics partner of Alibaba. With Tinyao, you can essentially fulfill all three of these different platforms, whereas with JD, it's a whole different ball game. So you're going to essentially bring up potentially your costs in terms of logistics, and it makes things a little bit more difficult. Also in terms of data resource, data that you can get from Alibaba and all the others that can help support all the different platforms. The connection isn't there with JD, so it really kind of stands out, even though it does have quite large market share. So usually what we would suggest for brands is to set up your CBEC platforms, Tmall, Kaola, and then Suning, and then later look for a distributor. What we found with cross-border is these things don't necessarily have to become an issue for distribution in market. A lot of distributors will look at what you're doing in cross-border e-commerce, they'll see how well the brand is doing, and then actually gives them courage to then take this product on. If you're able to do 2 to 3 million RMB sales in your first year or your first 6 months even through Tmall, then it shows that there is some confidence in the product and it will help them with their in-market play. What usually happens is as that grows, you can own that channel, you can try to bring in new products. We often use cross-border e-commerce as a testing ground for NPD. So that allows essentially for your domestic platforms, your domestic distributor to sell your heroes through your domestic, through the domestic platforms once it has been launched. And really then it's based on price. All of the search goes through the same platform for Alibaba, right? So you search through Tmall, you get cross-border and you get domestic. So really it's all about making sure who's going to take what festivals, who's going to promote at what price, to make sure that it's balanced. And then you've got offline retail. And then new retail. New retail is often much better for foreign products. I found that it's generally easier to get into these. And sales are generally better. If we look at the percentage of sales that come through Hema versus some of the more traditional kind of Yonghui and Carrefours, it is higher. Yeah, obviously family money convenience is a different ballgame altogether. So in FMCG, when we're looking at stages of entry, generally you have your IP protection is the most important thing. I'm sure everyone's been told about this before. No, you don't need to have a Chinese trademark to do cross-border e-commerce. But if you do set up a Tmall store and you haven't already set up all of your trademarks to China, they will be set up for you by someone else and you won't be able to get them back. I know it's something everyone always hears, but it is the most important part of China entry. Without it, the rest is not possible. Coming up with a market entry strategy and localization doesn't need to be a huge cost. We actually have a breakdown later in terms of budgeting and what that looks like. So market entry strategy, essentially, you need to understand which channels you're going through, how much is it going to cost, which product should you work with first. You need to have some product testing to get feedback on products. There's products that, for example, myself and some of my foreign colleagues have really enjoyed when we've received them from clients. But when we've gone through testing with local colleagues, there's been particular things. It might be flavors, it might be function, it might be something in China that maybe is more innovative in terms of packaging or cap design or certain things that mean that this product isn't as viable as thought. And often it does make sense to go back to the drawing table. So as part of that strategy, having a good understanding and getting some consumer testing in place is really paramount. Localization, again, as I always say, don't change everything. What we are finding, though, that it is becoming increasingly important to culturalize products, especially in the last 6 months. So that means essentially trying to create products that really fit into what Chinese consumers are looking for, and not just relying on kind of your traditional unique selling points of provenance and where the brand comes from and what it stands for. Brands that are doing the best right now in the market are really able to culturalize, right, and to be able to try and take their products and relate to Chinese consumers. Then is opening up cross-border e-commerce platform development. So I think one of the biggest issues that most brands make is that they get through localization. They go, okay, now I want to set up all of my media assets. I want to get everything done in terms of setting up my WeChat account and all these. Really the main thing first is opening up your sales channel. It is important to get that in place and to ensure that you do some A/B testing. There is nothing, no consumer testing that can ever replace what you can do on A/B testing, because even if you're working with an agency that is doing, 15 different focus groups in 8 different cities, you will get some great feedback on your product, but what actually drives sale, we find to be quite different. So A/B testing is a great part in the beginning, the first month of Alibaba, and the first month of being on Tmall. That will also help you understand in terms of how you should invest your media. So one of the biggest problems that we'll get when we're working with a client is that, I'm going onto Tmall, what am I going to do in terms of my media plan? And we would suggest different platforms depending on what actually comes out of the first month. So it's often really important to understand, pull the data and understand who is the consumer that I'm trying to target, what do they seem to like, what USPs work, what visuals are working, and trying to get all of that information and then moving into media. So first building up some initial sales, ensuring that there's a CRM in place, that there's a good loyalty program within Tmall, and then opening up the media channels. So I'm actually missing one little point here. There should be one before that says paid media activation. So paid media would be the first part. The biggest issue that we have when doing sales in China is that word of mouth and brand awareness are still the 2 major things that help drive sales. And so being able to grow a brand through Tmall, the most important thing is to create an awareness. So that's something that would start in the beginning. In terms of your official accounts, you can open them up a little bit later. So that could be, I wouldn't worry about in the beginning. It could be 2, 3, 4 months after you open your Tmall store, and you can start to then create content that really just validates but doesn't drive sales. Once you've built a substantial following, a substantial sales base on Tmall, there's a number of things that you need to do. 2, you need to start to collect all that data, retarget, drive through to your first major festival, which would probably be 618, 11. And then once that's been done, trying to take all of them learnings and expand. As I mentioned before, there's 2 parts to this. There's expanding merchant sales within cross-border e-commerce. So that's finding different distributors within the current platform, Tmall in this case, and basically working with them to try and sell more products. So once you've started to build interest around the brand, there'll be merchants and retailers that will take on your products, Daigo, for example, that can help to grow the sales as well. That will give the brand a much more popular feeling within the market. So when people actually search for your brand, it's not just, this is my flagship store, there's a number of other retailers and merchants selling your products. Then it would be moving on and expanding into cross-border e-commerce platforms. In this case, if you were Tmall, I would suggest Alibaba and Suning. So looking to get, again, more sales on different platforms, more recognition, and also to capture consumers that might not be going through Tmall, the traditional platform. And especially if we're looking at cross-border e-commerce, then that would be the case. Similar case would be if it's domestic. Obviously, it's just a different process. But I think, you know, one thing, if you're selling domestically as well, it doesn't necessarily have to be any different than what we've suggested here. But there would probably be a part a little bit earlier on after localization where we would have to build a lot more assets to support for in-store activations, to support for offline events. So that's one thing you don't need to do as much if you're doing a cross-border play. And then the next part would be looking at, okay, now that we've kind of gone through the cross-border, we've tested the markets, actually looking at the offline opportunity. And that's where you can look at different distributors in the market, try and understand their reach, try and understand how they will support offline. Now, choosing a distributor in China is very different. It's very difficult. Choosing a partner is an important decision that it's very, you know, once it's signed, for however long the agreement's in place. And the major thing that I found is that you need to make sure two things. One, that the distributor has strong capabilities online, but two, that the distributor doesn't just have capabilities online. So that's the major part, because there are so many agencies and distributors that can do online, but cannot do offline, but know they can hit a certain amount of sales through online, so we'll suggest that they can do both. Online is something that essentially the distributor will work with a TP in some way or form usually. So you need to make sure, out of all things, that they have reach. That means, what products have you got right now? What is the market reach? Have an agency go and look at where these products have been distributed. Are they exclusive to this product and market? You know, we've had clients who have gone to work with distributors where I've tried to explain that this product is distributed by about 9 different distributors. So yes, the reach looks great, but is that essentially being put forward by the distributor you're working with? And then finally, building your domestic e-commerce platform. So these are kind of the major building blocks of a China market entry. And then there should be one finally after this, I think, and that's just review and learn. So it's going back and saying, okay, which things aren't going as well as we expected? Why aren't they going as well as they expected? Even with us doing marketing now in China for over 10 years, there's still, with every brand, something that's a little bit different. And there's always cases of test and learn, even with media. So if there's something that you've missed and you've not quite done it before, then I would always give it a try, if advised by your agency. So to flagship or not to flagship. So essentially we have a kind of a range of whether it makes sense or not. So if you have a brand flagship store, generally you've got higher costs. This means you own it though. It's great for branding. You can get all the data that you want. I think the biggest frustration that we get, and from most brands that reach out to us, is I have a Tmall flagship store. It was set up by a distributor. I'm getting no data. The sales seem okay, but they're pretty flat, and I'm not sure where I'm going. If you're able to have ownership of that flagship yourself, you will get that information, and that will essentially help you in terms of getting the sales. It can help in terms of bigger returns. And then in terms of, in-app and paid media, everything you do will generate towards that store. And you can keep these followers. They're there forever. The sales are there. The data is there. So this is an important element too. If you go through retail, specialty, or online store, you've got lower costs, not as good for branding. You've got your chemist warehouse, so you've got these other types of retailers that sell online, that, you know, I know a lot of brands get quite excited about when they hear, okay, there's an opportunity for me to sell in China through a retail partner. The reality is that the sales won't be that high. Most retailers will have probably 20 to 30 SKUs that sell very well, and they will probably make up over 70–80% of their sales. So that's something to take into account. And if you are to promote within retail specialty online store, you might find also that essentially you're supporting a product that is actually supporting the store. And you won't be able to get data, and you won't be able to use in-app promotional tools. With cross-border e-commerce distributor, this is the one that we really don't suggest. If you're going to do cross-border play, you should own your own flagship. And then traditional distributor, essentially, in this case, you will lose control of your flagship, but it's kind of a necessary situation for China. If you're going to be selling in the market, the domestic platforms, you can authorize, but if it comes down to, we have a few brands we're working with at the moment, they're struggling to get it back, and they probably won't get it back. And Alibaba are often impartial to these discussions. So don't think that just because it's been authorized, you will get it back. Oftentimes that's not the case. So if we look at different platforms in terms of decision making, obviously Tmall Global has the highest market share. Kaola then follows, JD Worldwide, and then we go on VIP and Suning. So Tmall Global really is a platform to go to. This is what I suggest for most brands. Kaola would then be second. Do, however, look into categories and which ones are best to play. And these always change. I mean, alcohol has always done so well on JD. But then if we look at cross-border, Tmall Global is pushing very heavily on spirits right now. So it's something that you always have to monitor and make sure. You can ask Alibaba the BDMs before you then go to work with the agency. Ask the agency yourself as well. Obviously, Alibaba also have their own desire to bring more brands on. So they probably will tell you it's pretty great. If you get a few different opinions, you should know what it looks like. In terms of the costs, you have the cost in terms of working with the TP. You have these types of costs in terms of deposit, annual fees, commissions that are in place for Tmall and JD Worldwide as well. Obviously, Tmall Global is quite expensive, but in terms of returns, it should work out to be more profitable than JD Worldwide. When we look at building sales online, the major thing really is the split between first-time purchase, trying to get as much conversion as possible, and building awareness. These are the three things you should always be thinking about when you're trying to sell into China. Without them, you might find yourself just going in circles, because with e-commerce, the Tmall store really is about waiting. It's trying to bring up yourself at different levels. There's 8 levels on Tmall. So it's how do I get up to the next level? And that essentially is by selling more. If you go to Alibaba, often what they'll say is, okay, if you give me 3 million RMB, I'll give you programmatic ads direct to your store for 11. But there is no guarantee on sales. So you need a mixture of creating awareness, trying to create brand equity with the consumers, trying to create loyalty, trying to create repeat purchase, because that is really where the profitability comes into all discussions in China with regards to EC. And at the same time, trying to build enough awareness so in the long term, you're going to be building a brand. So this is probably my favorite chart that we have. This chart's quite interesting because often I'll get asked when looking at China, there's all these different channels. I've done my research. I know what I want to do in terms of localization. I've decided that I want to do Tmall or JD or whichever platform, but then what do I do now, right? And how do I take it from an awareness level to a sales level as quickly as possible? And the reality is, and this is what most agencies and distributors will tell you, is costs a lot of money in China to build a lot of awareness in the initial, in the initial period, there will be spillover at some point. So if you keep putting money into the Red Book, you keep putting money into these other platforms, you will find that eventually the word of mouth, earned media will start to convert into sales. That being said, it's a very expensive exercise. And so what we put together here is what we've found for most brands to be the shortcut. The shortcut essentially will allow your brand to go from kind of a measly 8,000, 9,000 RMB a month in sales to say 100 to 200 to 300 to 400,000 in say 6 to 7 months. And what we generally have focused on, and it does depend on category, not all categories will work like this, but if we look at FMCG for foreign products, generally Little Red Book is a foundational platform. It has 6 weeks where content will stay quite quite popular. It doesn't convert, it's foundational marketing. So when you first launch into the market, looking at how can I build enough noise around Little Red Book? And yes, it would cost a fair amount, but it's about creating enough seeds. So there's 2,000 seeds. There's KOLs you've been working with. This is while the store has just opened, bear in mind, so that you can then move on to the next phase. The next phase is more into direct sales. So if you look at the likes of Douyin and WeChat, a lot of brands will say, well, I've heard that I shouldn't work with WeChat, which I actually agree with to some extent. I should work with Douyin. I've heard Douyin's really good and they get sales. But the problem is Douyin gets sales. It's a video that is there for a limited period of time. It will get you sales, but then it is gone. And your footprint is gone. Little Red Book creates a footprint. It creates a foundation. And it creates SEO. So it's a very long-term play for brands. It's not about tomorrow. It's not about next week. It's about setting the foundations. And there can't be expectations that this will bring sales. What it needs to do is create the foundations before the sales start to take off. Once the sales start to take off, you can start to use things such as Douyin and WeChat, which are great converters. Not official media accounts, so not WeChat official media, not Douyin official media, but the KOLs, right? So working with the KOLs to essentially convert directly to your store. And then later on, once you're coming into these peak periods during 11, double 11, double 12, trying to work with live streamers, trying to build up themselves, and obviously doing in-app marketing with Tmall. And after you come out of the retail season, then what you'll find is it's all about brand building, right? So if you've had a successful launch, you've managed to have a few million, 3, 4, 5 million RMB sales within your first year. You're coming out of retail season as you go to January and February. You need to consolidate that. And to consolidate that, you essentially need to go to platforms that aren't about conversion again and start to create more noise and more of a footprint. And this is about growing the brand. The next stages after that, really, you have to move into creating gift with purchase. You need to create more value to the brand and the product itself. So we've got 2 packages that we think are kind of, they work for China. They're obviously, from our opinion, the costs that are here, there may be some cheaper ways of doing it. There may be some more expensive ways of doing it, but essentially, this is kind of what you're looking at when you're coming into market. You need to register your trademarks first. If anyone on the call who's coming to China hasn't read their trademarks, I would give it a go now. We get bad news for clients all the time in terms of you can't be registered. It's very difficult. And once that happens, there's no way back. So that's the first part. And generally, you're looking at probably just under $1,000 per class, $800, $900. So then you've got 3 or 4 classes you should register it in. Some of our clients will only register in 1 or 2, and they come to us and it's often the wrong ones, or that hasn't covered a marketing one that we need for Little Red Book. So make sure you're registered in all the correct classes. Next part is research and localization. This is really a phase that needs to take its time. It needs to be done correctly, because then it's probably going to be another 6 months until you look back on what you've designed, the outcomes, the naming. Chinese names, when often asked, is a Chinese name important for my market entry? It's a difficult, it is important. It's difficult to answer, because no, you shouldn't put it on your packaging, and no, it shouldn't be displayed everywhere. But the simple matter of the fact is that most Chinese consumers still search through Tmall with Chinese names. So you do want to grow your Chinese name. So it is important to get it right. It is important to make it relevant, it's catchy, it makes sense, the meaning is there, and it can be related very much to your brand. So localization and research, getting all your assets ready is very important. Local production, everything. It really means a lot for the brand in terms of sales. The next part, obviously, is the platform setup. That usually takes around 2 months, but it depends in terms of logistics, getting products sent over. And then following that, you have EC operation. So this is like a ballpark, essentially, of what it would cost for a TP. That can get much higher than that. I have seen it cheaper than that, but generally it's around there, if not a bit more. And then you've got EC in-app marketing, paid media marketing, and then own media. So you're really looking at a minimum investment, I would say, for a fire starter, we should say, in the first year of around $300,000. So it's not a cheap market. It's quite expensive. But the fire starter package is for a brand that really wants to give China a go, is very much invested in the market, and wants to also, on top of this, have further expansion. In terms of budgeting for markets for the slow burner. The slow burner is a brand that has money to essentially put into the market, but is not looking at an immediate return where it's, I want to have 9 million RMB in the first year. It's more about, let's get things set up, let's see how the product does, and being able to review that. It becomes a much cheaper option into market then, probably around a third, half the price, but it does mean that your returns are going to take a far longer time for you to reap the benefits. So this is something to take into account. Certain things don't change, EC operations wouldn't change, but your investment, as you can see on in-app marketing and paid media, has dropped significantly, and we've even pulled out owned media. Owned media is really for brands that are looking at this market long term, and they're wanting to grow in 3 to 4 years a 10,000, 15, 20,000 follower base across their own media that they can later rely on when they're coming up to big sales promotions. So these are really the two different types of budgets you're looking at if you're looking at, say, a Tmall global or even Tmall domestic potentially operation. Okay, so in terms of social media, yeah, the importance really is in terms of growing that initial purchase and also trying to influence the amount of times that people see the brand. On average, it takes 8 times for the Chinese consumer to see a brand before they will purchase. So it is quite a large investment. What we've started doing is a lot of word of mouth marketing. So basically seeding would be one thing, working with influencers, but then also doing sampling programs, trying to get more people to talk about the brand because it comes across more authentic. When the word of mouth is involved, what we find is that generally purchase is much quicker. So you don't have to go through the full 8 times that you would with programmatic advertising. Online awareness is really the major part of what you need to do in the beginning. And with a lack of that, you can't just sell through Tmall. There are brands that we've launched on Tmall that have been able to get good returns initially with very little investment in that marketing. What we see is very quickly that levels out and it actually becomes quite unprofitable because the growth for the brand in terms of repeat purchase isn't high enough. Top social platforms in China, these are the major ones. Again, as I mentioned, the way that they work is really understanding when to use them, how to use them, and what their purpose is. And that will help. I think I've already run through these, but WeChat is closed. You don't need to do 4 posts a month. Kuaishou is really focused on live streaming and an initial part of growing a brand along with Tmall live streaming. And then we have Douyin. Douyin's expensive, but the store, if you're in domestically, is very useful. And then Xiaohongshu is really the hottest platform in the market right now. So Xiaohongshu, Little Red Book is doing very well. I think most brands are really focused on this platform. One thing to mention, a lot of people might have heard recently the news that a lot of these platforms are starting to open up. They haven't as of yet. This is great news for all brands in China, all brands on e-commerce and all agencies in China. It now means that we'll be able to connect different platforms directly to, so different media platforms directly to e-commerce. So this is a big part of where the market is going, and I think it's great. It's going to mean that a lot of these platforms are even more relevant for market strategy. The only one really to point out there that I wouldn't put too much investment in would be Weibo. It's something that we still do, but it's very low cost, and I don't see for any categories, in fact, there being a large investment on that platform. Owned media and paid media, again, paid media is very important, but owned media is something that you will need over time. It's about growing the brand. It's about creating a hub. With WeChat accounts, we used to get much more followers. We don't anymore. What we find generally is that people will come around, they have a look, they kind of see what the brand's about, and then they leave. They don't want to follow and hear about the brand every week. It's a website, right? So that's the way that it works. Little Red Book owned media is very strong. That is something, again, I think as a platform, it's great. And also Douyin owned media is very strong too. But generally, you need to put promotional tools, you need to put investment into these platforms. You're still better working with KOLs and other types of sampling and seeding initiatives. It is the most important element is for a multi-channel approach. Don't just focus on WeChat. Don't just focus on Douyin. Focusing just on Douyin or Little Red Book can work to some extent, but it will have limitations. depending on the product category. I mean, Douyin is all about awareness. It's all about entertainment. It's about different types of content that are entertaining you. It's sports. It's drinking rituals. It can only show so much of your brand. It's not going to be able to deliver all of your brand message. So some effective strategies for brands. First, decide whether you are a slow burner or a fire starter. I think that's the most important thing. You don't want to get halfway through being a fire starter and then realize actually you want to be a slow burner. You need to look at the budgets, you need to understand, is this an important market for me? What am I trying to achieve? And how is that budget going to be broken up from day one? Innovation is key to success. You'll see in the Red Edition, which will be released tomorrow, that what we're seeing with foreign brands that are doing well is that they're innovating. They're coming out with flavors that are suited for this market. There's obviously been a huge rise, for example, in peach flavored products in China across all categories. We're now seeing some really cool NPD coming out of domestic and foreign brands in terms of these flavor profiles. These are things that brands need to take into account. Innovation is key to success, so localized NPD. Build brand loyalty by creating connections with consumers. That's the most important thing as well. For WeChat, for example, for some of our brands, what we started doing recently is creating like a little assistant or a helper that essentially can have a one-to-one discussion real time with consumers. What we've realized that this is happening in Tmall, so why isn't it happening in media? Chinese consumers want a lot of attention, they want lots of background information, and not just in your standard format of this is a long WeChat post. Now it's about one-on-one discussions and really building that in as part of your sales team. Be prepared to react fast to China and have flexibility. Things change all the time. Every month, something will change. And some of our brands that are able to react and change quickly can jump on these opportunities. The ones that aren't able to. Create as many touch points with consumers as possible, building up brand awareness. And again, that's the most important part. It's trying to get as many people and the spillover effect from media into your EC ecosystem to try and bring up the store weighting, to try and help the brand grow. And I think just touching back again, so I don't think I emphasized it enough on the flexibility. If you're not able to come back on a daily basis with regards to changes in the market for China and can't put that much attention because you have a global expansion, I would probably stay away for now. It takes and demands a lot of time to China, both in time and in money. So common pitfalls, not registering your IP, definitely that's a number one. Any new change, any new slogan, register it. It never becomes a problem until you become successful and do really well and sell a lot of product, and then suddenly it's not an option. So that's the first thing to get in place. Not owning all of your media channels. As mentioned before, there is the situation where it might be the case domestically that you can't have full ownership of Tmall and JD. Cross-border, you should try and own as much as you can. Media channels, there is no excuse. All media channels have international options apart from Douyin, and even Douyin, there are ways of getting around it now. So own all your own media channels. Letting your distributor run everything for you is not a smart move. It'll mean that one, you don't get a lot of oversight. It means that two, that often you'll find that they might take directions with the brand that you don't agree with. Distributors often, they'll take products, they'll give it a bit of effort in the market. If it doesn't fly, then they'll give up. China's a hard market. Things don't take off in 3 to 4 months. So trying to let your distributor run everything for you won't necessarily help you in terms of trying to grow your brand in the market. Not setting realistic expectations for your category, and then don't forecast heavy returns in year one, for example. Year one is all about growth. It's about getting sales. What we see for all of our brands is every Double 11, there's substantial growth, right? Whether that's twice as big, 3 times as big, 4 times as big. Patience is really important with this market. Be prepared to be flexible and adapt to any sudden changes in the China market, whether that be regulatory changes. We've now seen that with packaging in some mother and baby categories, that there's issues now in terms of it has to be in Chinese. There's always going to be big changes that happen in the market. We've now seen it in terms of live streaming. We've seen it in terms of types of KOLs that we can work with. And then also the biggest pitfall will be trying to implement the same overseas marketing strategy in China. It's completely different. So whatever works overseas, yes, it's good to look at what was important, what USPs worked, but most importantly, they're very different markets, and that always has to be taken into account. Okay, brilliant. So I'll open the floor to Q&A. This is our WeChat account. We send out information every other week, so feel free to follow it if you have any other questions. Yes, I'll leave my email address in the chat box for everyone. So if you have any other inquiries or problems or issues, feel free to drop me an email. Yes, if you have any questions, I believe Sandra will be joining now, but if you have any other questions, then please do feel free to drop them in the Q&A, and then I can answer them. Thank you, everyone.
Yes. So we've had a couple of questions come in. The first one is, how can new companies become known in this new market easier and faster?
So to become well known?
Yes, to become known in this new market easier and faster.
Okay, I think it's about doing lots of different things in terms of variety, right? If you're trying to, for example, flood a platform by Little Red Book, what I would do is I would do everything in a very short period of time. If you try and drag things out too long, what happens is you have lots of content, lots of footprint, but not much happening. You need to look at a key periods where you say, that's my month and I'll own that month. That will allow you to get lots of opportunity in terms of exposure, try to trend on platforms. I think that's important. I think also it can never be a game of how much money do I have and how much exposure can I get. It's going to be more of a case of how can I create IP that will get the most out of my exposure, because it does cost a lot to get exposure in China. So coming up with brand story, merchandise, different things, added service, differences to consumers, cross collaborations with other brands. These are all things that I think are really good. Celebrity IP and endorsement so that you can use that across all of your visuals. These are things as well that I think can support in terms of the awareness elements. You need to ensure as well that things are wrapped around a campaign. So understanding that, okay, this was going to be our month. We want to do a preheat before we go into Double 11. So from September until October, we're going to do this particular campaign. What is going to be the focus of that campaign and what are we trying to push? I think that's very, very important. The final thing would also be UGC. What we've started doing for most of our brands, because obviously the most important thing out of everything in China is first-time purchase, right? Despite how famous you become, if no one tries it, then you've got a bit of an issue. It becomes a case of, I've heard of that brand online, I've seen that brand online, but I don't know anyone that bought that brand online. So sampling is important, trying to get people to discuss your products, trying to get people to talk about your product and increase earned media to at least 30% of your investment. So if you're looking at awareness, if you have 30% of your investment, of your awareness being in earned media, not paid for, then you're going to get good returns. And I think that's the quickest way to get yourself well known. Some other ways online that you could do that is trying to contract the likes of Via or Li Jiaqi. They're obviously large live streamers, and then trying to piggyback off the back of them. I think that's important. If you're staying out of kind of the more kind of celebrity area, that can work using their IP across Tmall. But yeah, I think you need to use a number of them different approaches, as I mentioned.
Great. Another question is, how can you deal with the local culture to practically build trust and be competitive in the new market? So it's about localization and how to connect to the local culture.
I think, as I mentioned before, there's localization where that's always been around, right? So it's how can I create a name that resonates with Chinese consumers? That's important. It's still there, but it's definitely more become, how can I do things that domestic brands are doing to make my brand feel more like it is a Chinese brand and it's part of China? I'm not just another product that's been sold into market. I think the way to do that is to, your kind of your standard brand would, it's Chinese New Year, I'm going to push out a post about Chinese New Year. The brand that's trying to culturally adapt would think, what would domestic brands be doing at Chinese New Year? They'd be creating gift boxes. They'd be doing things with other, collaborating with other domestic brands to try and do this, create these gift boxes. They'd be doing different campaigns with, little red packets. They'd be doing things that are more related to that key period. They'd be launching new products that fit in with that key festival. I think that's the most important thing. If we look at Mid-Autumn Festival we just had, it's about, you know, the major thing in China is mooncakes. So it's not about just saying happy Mid-Autumn Festival, it's how can I relate my product, whether it's in cosmetics, how can I work with a domestic brand? If I'm in food, how can I create a batch of VIP specific mooncakes, right? So I think that's an important way of trying to relate with the Chinese consumer. It's not just posting about a holiday for the sake of it, it's trying to create things that are more relevant. And the major thing as well is trying to understand like nuances or problems that Chinese consumers are having and trying to find ways that your product can support that. I think that's another big element as well. If we look at, for example, Chinese domestic brands, they're really good at coming up with NPD that solves a problem or a function. So for example, children having dairy is a big thing in China, right? So it's often seen as building as being good for growth and building strength in children. So then there's now this huge growth you'll see in the Red Edition tomorrow around kids cheese. It's like a big opportunity here because milk just was quite inconvenient to have, but with parents being able to give these little blocks of cheese to their kid, then it was just something that fit well into that need. And so brands are now trying to adapt and fit into that particular format, right? Because some of the foreign brands in food and beverage or in other areas, that it's too big, the format, right? Chinese consumers like smaller formatted products that you can have on the go. So there's different ways. It's trying to look at, okay, what are the problems? What are consumers looking for in the market? What's important to them? And then if you want to relate to them culturally, trying to relate through festivals, but in a way that actually is providing value, not just telling people that we are on board with this festival.
Another question was, why should brands choose to focus on Tmall Global or JD Worldwide at initial launch into China?
They're the largest platforms. So, I mean, if you look at doing, for example, going with Little Red Book, you're just not going to get the returns you could get on Tmall. It's just, it's not possible unless the brand already is extremely famous and launches onto Little Red Book and goes hot within, I don't know, a period of time. The point would be that it would probably just go as hot on Tmall. So I think that they're the two major platforms for a reason. If they get the highest traffic, it's the best place to grow your brand. It's a validation piece as well. I actually wouldn't suggest, as I mentioned before, going on Tmall and JD together first because of logistically, it makes sense to go on Kaola actually if you're doing cross-border. Domestically for brands, then JD and Tmall just make sense, right? You work with a distributor, they will list products on both. And then you sell through them.
I think we have time for one more question. And then for all the other questions, we can always reach out by email to answer them through email afterwards. But the last question is, what would you say are the most impactful paid media platforms for driving sales for new brands outside of the paid media in the Alibaba ecosystems?
Depends on the platform, but sorry, Sandra, that was to drive sales, correct?
Yes. What would you say are the most impactful paid media platforms for driving sales?
Okay. Kuaishou live streaming and Douyin live streaming would be the top ones. Obviously, Douyin live streaming is a little bit difficult when linking to Tmall. Hopefully that will be sorted very quickly with the opening of the platforms. Outside of that, this sounds very bizarre. We have the best sales results by working with WeChat KOLs. We put in the Tmall coupon yeah, we found that we can get 1 to 5, 1 to 10 conversion working with WeChat KOLs for FMCG products, in particular food and beverage, premium food and beverage, which is quite bizarre. Now, if you look at the cost of WeChat, it's very expensive. The cost per view is 1 RMB to 1 view. If you look at that on Douyin and other platforms, it's significantly cheaper. So, but actually, if you look at the sales that we get, even now with our sampling programs we're running where we can get guaranteed sales, our sampling programs essentially, they're all done through WeChat groups. So everything is WeChat driven. And it's quite a bit of a contradiction because if you look at the fact of owned media, WeChat is the most closed ecosystem in China. So in terms of growing your own account or doing anything else on WeChat, it's a complete nightmare. But I think because it's closed, what it means is that when there are promotions by KOLs or by friends on their moments, people feel it's quite genuine. And so we find that conversion is much higher. through WeChat when it's used correctly. I mean, if you're doing moments advertising, it takes away that whole sense of that closed ecosystem. So it doesn't work in the same way. Little Red Book has by far the biggest hype, but definitely not the best sales conversion. It's just one of the necessary things. What we find is over time, it really helps to grow our sales, but initially it doesn't. Even with, trying different things within Little Red Book, it takes time. But again, it depends on the platform. But I would definitely go with still live streaming, Douyin, Kuaishou, and then WeChat. Okay, I think that's all the questions, Sandra.
Yeah, I think that's all we have time for now, since we're already 7 minutes over time, but yeah.
Okay, all right. Well, thank you everyone for your time today. We will be having a number of other webinars coming up in the coming weeks. So every month there'll be another webinar with a new topic. Look forward to the next one. And if there's any questions, I will drop my email into the chat right now. Feel free to reach out and ask any further questions. Brilliant, and thank you.